everybody. This live stream is just getting better and better, and I'm going to make sure that you're going to get all the information you need to understand the market. So, as I announced today, all macro conclusion will be included into the live stream because this is the best place for the macro conclusions. Because obviously we do this live stream 2 times a week on Monday and Thursday, and we need to understand why, for example, the macroeconomic pressure or any kind of ease is placing onto the market sectors, and therefore we need to analyze all the conclusions together. So doing so, we're going to keep the same structure as we did before. That means the first part of the live stream, we're going to check out what the market is doing and why the market is doing. So we're going to understand where the money is flowing at the moment. And for the second part, for pro members only, we're going to check out the charts and talking about that a little bit. So doing so, we are starting as usually with the macroeconomic data. And let's see what happened this week so far. And what happened is very exciting. We got very much news and information about the current macro data. There's not much happened on Monday, as I told you earlier. And also the Tuesday CPI, Canadian CPI, is roughly unmoved and therefore didn't place too much pressure in moving to the Canadian market and to the Canadian dollar as well. And the Fed meeting is also was a little bit neutral in terms of market moving. However, Wednesday, so yesterday, we got data which is not very good for the market, to say the least. Let's check out that quickly. So the first important data we got is the US unemployment claims, which was 233K previously on the last week, and now we got the 209K this week. And so if we check out the chart a little bit, as you know, this is a decline. It's a little bit lower, well, not a little bit, but fairly lower than the expectation. And as we see that there is a fair consolidation in the data, which means the US unemployment claims is not accelerating on a level that's so much, and myself expected a little bit earlier this year. However, there is a completely different situation with the unemployment rate. Now, I would like to emphasize once again that there is a big difference between the two. And in the summertime, when there was a chance in the United Kingdom that the unemployment rate will indeed start to rise, I told you so many times that the United Kingdom is actually making a little bit harder to apply for any kind of unemployment benefit. Therefore, the unemployment claim numbers were able to hold its stand for a little bit, and the unemployment rate was starting to rise. And so this is a controversial data. This is a little bit of playing to make it the economic outlook a little bit better for everybody. But at the same time, obviously, it's reducing the cost of the government. And there is something similar going on in the United States right now. So the unemployment benefits are a little bit harder to get. Therefore, the data is not rising on a level as it would be expected at this time. In the meantime, there is a lot of people, a lot of family in the United States making 2 or 3 jobs at the same time in order to fight inflation. That's a different type of fight than the Federal Reserve doing it. So, because we are talking about the different types of inflation, obviously. So, therefore, it's not a big surprise that the unemployment claims does not rise with the pace we would expect. But at the same time, I also emphasized in the last couple of weeks and months that our focus or shift is turning away from the unemployment claims data because obviously the market is also paying less attention for that data, but at the same time the unemployment rate gets more attention, and therefore we are focusing on that. So yes, technically we have a decline on the data, and this is positive news for the US dollar and for the US stock market as well. But at the same time, I think if somebody is basing its trading or investing activity, particularly because of this data, is a mistake, because as I said, that doesn't really represent the real picture of the economy. Now, that's one part, and what good news, somewhat good news, but at the same time, we got the core durable goods orders and the durable goods orders, and that's the thing what is really, really bad, and we got a shocking data again. Now, for the core data, the previous 0.4%, it was actually a pretty much acceptable result, but this week, this Wednesday, we got a 0.0%, so it's a big decline. And if we take a look on the chart, we see that there was a 5 months consolidation in the data, and then suddenly we dropped back to 0.0%, which means that production of those durable goods produced in the United States will start decline. So that's the information how producers, how the activity of the producers will develop in the close future, and if they ordering less goods for producing durable goods, that means that they are planning to actually producing durable goods less what they did in the last 5 months, and therefore this is a very clear picture, a very clear signal of the slowdown on the US economy. So it doesn't really matter how the communication from the government is positive, and obviously they try to try to show the picture at the front of us that is a very good thing, what is happening in the economy. We created 1 million jobs, blah blah blah. Yeah, but also you lost 10 million. So that's a narrative what they are trying to drive through the media. But at the same time, if we take a look on those data, this is a shrinking economy at the moment, a complete slowdown. And remember, what did I explain about the Fed? That the Fed is actually, the goal of the Fed is to slow down the economy. And yes, while the Fed is communicating that they want to do that on the way that they do not damage the economy, or they do not damage the people, that's technically an impossible task. It never been done in the past, and it's never going to be done in the future as well. Now, if we take a look on the durable goods orders data, the previous data was 4.6%. This is a little bit more volatile information. And the new data become minus 5.4%. So this is a huge decline. As you can see, we are declining back. And if you remember to my analysis about this data, at this moment, you realize exactly what that means. And this is a data which is really exceed the expectations to the downside, even though the expectations were negative, but not that negative. And that's a complete, almost shutdown of the production of the durable goods. So that, if you think a little bit, that means that every single item which is considered as a durable goods will be less and less on the shelves and in the shops, and that means an economic slowdown will hit the people after 2 months after this data, and that's this is a supply demand question from that point, and that means the supply is way lower than the demand, and let's see how the inflation pressure pressurize people in the close future, because if the good scenario, I mean, it would be if demand is also declining together with the supply. Let's see how that goes. So very negative outcome, and this is a very negative news for companies who producing durable goods, and also for the US dollar. And we experienced obviously that the dollar was continuously declining this week. So if we move forward, the story not ends here, because here is the revised consumer sentiment, which was 63.8 the last time they published. and the new data is 61.3, which means that people do not feel safe in the current economic environment. The data is declining more, as I emphasized at my analysis. That was a corrective trend to the upside within the bear trend what we experienced in the data, and it looks like we are stepping out of the correction and continuously declining further and further. Again, I understand if you see any kind of positive news about the U.S. economy, how great is it, etc., etc. But it is not great, and people do not think that it is great. So we are continuously declining in terms of the mood, and this data, the revised consumer sentiment, is one of the major data which going to affect the market sentiment as well. So when this is declining, that means if you see that the stock market is going up, that means only the part of the active market participant buying the market who cannot read the economy, who does not understand the economy, and who does not understand what is where we are heading to right now with the global economy, not only the US, obviously. So this is a very negative news again for the stock market. And also we got the revised inflation expectation. I had a very intense and very long analysis about this data, what that means, and how should we understand the data itself. The previous figure was 4.4%, and the new figure is 4.5%. And if something is shocking, this is really, really shocking. Now, remember, the previous data spiked up all the way up to 4.4%, sorry. And that means the expectation from people towards the inflation was not only rising, but drastically rising. So people expecting more and more aggressive inflation. And after the publication of this data, we received the CPI data, which showed a declining CPI in the United States. And therefore, it would be a obvious expectation that, okay, there was an error in the calculation, etc., etc., and the data is supposed to decline back somewhere around 3.5%, because obviously the CPI was declining. And people maybe misinterpreted the situation in the economy. So the normal expectation was 3.5%, but somewhere between 3.5 and 3.8%. But then after the good CPI numbers, which were declining, we just received this data, and the inflation expectation is rising very aggressively forward to 4.5%. Now, this is a complete nonsense if we try to understand what is going on. So people not only being scared for 1 month for inflation, for rising inflation, they indeed feel the rising inflation, and saying so, they're expecting even further rising inflation while the inflation data is actually declining. So if you take a look at the inflation data, the actual CPI, what we received 2 weeks ago, or 1 week ago, if you take a look what kind of items they're pushing down the inflation, this is like premium for insurances, which nobody understands because nobody experienced the insurance premium decline, and things like that, and the suppressed energy prices, which we know exactly what that means and how it is affecting the CPI number, but there is nothing else would decline within the CPI. So what we can say in a human way, that the CPI numbers are indeed manipulated on the way that they are manipulating the numbers which build up the CPI basket itself. So people are not only scared about rising inflation, there is inflation and it is rising. They're feeling it every single time they're going to the shop to buy anything, technically. because every single prices are rising. So saying that the inflation is declining is a lie, and I don't know how long they can actually manipulate those data, but at one point this thing will crack, and it will be a very, very bad end. Now, more and more economists, and including myself, predict a very sudden and very sad first quarter of 2024 on the stock market. As I said, I think in exactly the same, exactly for the reason because we are looking behind the data and we see what is going on exactly. So whatever the stock market is doing to the upside is still fake. Now that means whoever is trading on shorter term, so it's a trader, maybe intraday trader, they are still good to thinking to the upside as long as they understand the reason why the market is going up, and they are 100% aware what is the sign that they are need to get out of the position. And in that case, buying anything, especially on the CFD market, is absolutely an okay thing. But when somebody is thinking a long term, I still 100% sure that it is a mistake to see the current market condition as a good condition for start buying it for long term. So that's a perfect proof for all the communications I tried to make in the last couple of weeks and months, and the story still not ends here. Now, despite I did not have an analysis on crude oil inventories this week, I checked out the new data, and I am forced to bring in this data right now for this live stream because the previous data was 3.6 million, and now we got an 8.7 million, and that means that we are actually above the zero since the 5th month now. And the expectation was very low because everybody expected that, oh, okay, the economy does not slowing down. Everybody is using oil. Everybody is using energy on the same way as the government is communicating towards us. And also everybody was expecting that the industrial sector will not slow down. But the industrial sector is indeed slowing down. We see that obviously in the data, especially with the core and the non-core durable goods orders, what I just explained to you. And therefore, we got that spike on the oil inventories to 8.7%, which means the US economy does not use as much oil as it would be normal for a good working economic system. And so this economic system is not only spiking, not only slowing down, but it does in a trend-like movement. As you see, we got the lowest point a couple of weeks ago, and then since that time we are rising in a trend-like manner. So that's a very, very, very negative news for the U.S. economy. And so whatever happened on Wednesday is a very bad news. And here is another part of the new data what we received. Here's the EU flash manufacturing PMI and the flash services PMI, which is in terms of the manufacturing PMI, the previous data were 43.1, and now we got the new data 43.8. And as you see on the chart, this is not a big change. So technically, we are still way underneath the 50 line. That means that the manufacturing sector does not improve, but at the same time, right now, we can say that it does not weakening any further at this moment, at this stage. But it's obviously going to depend on the German market and the German industry. And so it's not a positive news, but in a short term, not even not a negative news for the European economy. But at the same time, given the fact that the point, the 43.8 point, is still well below the 50, that represents a slow and technically inactive economy in the European Union. So for traders, that could be a positive news because the number did rise a little bit, but for investors, this is still a very, very bad news. And also we got that services PMI, the flash services PMI, which was 47.8, and the new data shows 48.2. Now that's a different scenario because in that case we indeed declining compared to the previous data, and it doesn't really matter that the new data is matching with the expectation. It's still a declining compared to the previous, which means that the services sector keep slowing down, and this is predicting a further massive decline on the stock market. Not right now, but whenever the stock market realizes that we cannot believe anymore to the communication that everything is fine, just look away, there is no problem. Everybody stay calm. Yeah, there is a problem. There's a very serious problem, not only in the United States, as you can see, in the European Union as well. And that doesn't mean that we're all going to die, so probably we're not. But the economy will indeed get in a worse situation. Now, that's a good news for the central banks, both for the ECB and for the Fed as well, because this is the goal, what they want to achieve. Because obviously, at some point, they need to change the monetary policy. But in order to do so, they need to slow down the economy that is actually, well, what they communicating is just not damaging people, but in the real time, in the real life, it is indeed at this point will damage people. It does actually at this very moment. So this is the information we have from the macroeconomic area. And if we think through a little bit, this is a negative pressure for the stock market, for the ETF and index market. Because of the slowdown economy, that would represent on a long run slowing or declining GDP numbers as well, which has a negative impact on the currency market as well. So this is somewhat negative for the currencies. But at the same time, if the DXY is experiencing more pressure to the downside, then because of the decline of the DXY, other forex indexes like the EXY, the Euro index, or the other 7 or the other 6 what we are following is obviously could get a chance for, even if they're not rising because their economy is slowing down and their GDP is probably declining in the close future, but still maybe consolidating in one level. By the way, this is the situation what we're experiencing right now. So you can imagine when we're gonna see the summarized numbers here, we can talk about that negative pressures on the ETF and the forex market as well. Now, in the commodity market, this is somewhat neutral because the commodity market is already got used to it that the economy is slowing down, and the commodity market does not expect any different effect from this information, from this situation. Next time we can expect any kind of macroeconomic impact on the commodity market. I mean, a huge one is when the industrial world globally start to wake up and start to accelerate, even though a little bit, because that means that the demand is starting to rise. Now that's the key word, that the demand, we need the demand rising, and suppliers need to make sure that when this happens, the supply is lower than the demand, so they can start rising prices. Which means because the demand is still pretty much high and it's just about to start declining at this time, as we experienced on, for example, the durable goods data. This is the time when the demand is really, really declining. This will take massive months, if not years, for this process for declining to a very low point. And then when this happened and the industrial world can wake up, then the supply will be very low as well, so they can start creating more demand and creating more supply. That would be the natural way of thinking about that. And that means that this is obviously creating a picture that the global economy is still in the middle of a slowdown process. It did not reach the bottom, and that conclusion gives us an idea how long the bad economic situation can last. And at this moment, unfortunately, we can talk about years and not just a couple of months. So, well, it's a question. What would be the time when central banks start to change the monetary policy? As I told you earlier, that's expected when the economies really start to hurt people and everybody. And probably we need to get some trigger point, as we experienced in every single time when there was a very drastic monetary policy change, like the bank sector is kneeling down. People are failing to pay for technically everything they have to pay. And that will be the moment when the monetary policy will be changed. And this will be the moment when central banks start to printing money again. So yeah, there is still no money printing. I know that we talked about that in January as well, but there is still no money printing. And this time is not going to come until we're not going to get some disaster effect from the economy. And so the crypto market is interesting because, as you know, the only negative effect on the crypto market right now is the macroeconomic impact, and because of the money supply. But at the same time, the crypto market is experiencing very positive developments in terms of the regulations. Indeed, very, very positive. And therefore, this is absolutely counterbalancing the negative effect of the macro. But there is one thing I need to really highlight at this point. Yes, the crypto market is positive, not because of the macro, and this is the major point, not because of the macro. But the crypto market never experienced a kind of event what we saw on the stock market and the currency market in 2000 or in 2008, and the major recessionary period. And so we do not know how the crypto market will react, because there is money in the crypto market. We saw that, not too strong, because the money supply was declined. The fiat currency money supply was declining so drastically over the past 1 year that it's preventing people to transfer money for the crypto market and start playing around. So there is a limit how high the crypto market can go in this environment. And if there is a crash in the money supply, an even sudden crash, if there is an event when people start to failing paying their loans, that's something that the crypto market did not experience just yet. So there is two parts, and if you go to the deep dive room in the Discord server, both in Hungarian or on the English server, you see the new deep diving, which is a brilliant writing from Bela. I just loved it because this is something what we want to talk about. And there is a vote at the end of this publication. What do you think? Is it going to be a very positive crypto environment in the future, or you afraid about possible problems coming up? And the thing is that we have a very positive environment if everything would be fine and the economy would be fine as well, and the money supply would be fine. The crypto market could see from this moment a very, very good, a very strong bull market. That's because of the good regulations, etc. We're going to talk about in a minute. But the thing is that we should, or we're supposed to vote for both of the scenarios, because at the same time, we know exactly that in order to create a bull market, a massive bull market on the crypto market, you need fiat currency for that. You need fiat currency, to bring it into the crypto market and push up the prices, because you need traders. We need trading activity in order to create a bull market on the crypto. And if this gets something on the way and something is preventing this to happen, it's obviously a problem. It's a big problem for the crypto market as well. So don't be just overhyped. but be wise when you planning with how long you want to keep a position on the crypto market. That's the best advice at this point I can give you right now. So moving forward, there is no change in the geopolitical field. Actually, the map is staying exactly on the same way, and therefore you can imagine that the effect on the crypto on the market sectors does not change drastically in terms of the geopolitical effect of those or on those market sectors. The corporate earnings is very strangely do not change as well, despite the very positive Nvidia Q3 earnings report. I already had the analysis on the website, so if you missed it, just go to the website, search for the market news, and go check out the analysis, and go check out why the positive report is signaling some, probably problems, not right now, but for the close future. And so, yes, the earnings effect on the market sectors do not change, but obviously the earnings has no so much effect on, for example, the crypto market, the forex market, or the commodity market, but rather the ETF index and stocks. So that's what it's where it's unchanged at the moment. Now, there is some changes in the market news and events. If we just take a look on the ETF index and stock market, as I mentioned, there is the Nvidia report, which came out very positive, but at the same time, we already see how or where this train could go to the wrong way, if you know what I mean. So Nvidia is bracing for impact. That's obvious. And this is why this report is very positive for traders and very positive for market participants who does not really or do not really understand the market, and they're not trading or, let's say, investing, but that would be a stupid word, on the way that it's supposed to be. Now, there is no surprise why in average 74 to 84% of the traders result is negative instead of positive, because most of the traders do not understand the market. They do not know what to watch on the market. So this is a positive news for them, because all what they say is a report or a headline somewhere that, oh my God, Nvidia reported record things, and this is very positive. So this is the, let's say, not too clever trader then go and buy Nvidia, which is not a problem. It would not be a problem if the price is really going to the upside. But at the same time, when we buy something on the market, we also need to plan when or why or how to get out of the position when we need. Now, those not too clever traders can reach to the point to buy something, but they are not able to think through when, why, and how to get out the position. So they're going to stock in and they're going to hodl forever, and they're never going to make any money on the market exactly for this behavior. So be clever. It's okay to buy something when it's going to the upside, but be ready to close the position when you got the signals. And well, we're going to talk about that when we summarize the points. So this is the effect. So for investors, for clever investors, this is not a good news. Not a very bad news. At the same time, this is a news when an investor could think that, okay, I'm not going to start investing into Nvidia right now because I know exactly that very bad economic situation is coming. Nvidia is obviously bracing for impact, so that means they are preparing for the share price going to go to the downside for a little bit longer period. And therefore, it would be stupid for me as an investor to buy right now the Nvidia. But the report is also signaling that the company itself is not only in a very good position, it's market leader, it's preparing, it has a plan how to step up again when all the shit is going away. And that's a good news for the investor, because then the investor says that, okay, when all the shit went down to the drain, and the economy is ready to step up, then I can start investing into Nvidia, maybe. So this is the difference. This is how psychology is stepping into the field when you trying to figure it out when or how to buy something, whether you have to buy as an investor, so you don't give a shit about the share price, but you want to earn from the income of the Nvidia. That's what makes investors investor. And or you want to be a trader who is really trading because you want to make money on the price change on the charts. And regardless you're doing that for the short term or for the long term, this makes traders a trader. And that's the difference. So psychology is a very important part, and understanding what the report means exactly for who, now that's a big difference. So it's not easy to say that this is positive, because in some way this is a negative report, but in some way it is positive for if somebody is an intraday trader right now, because now maybe a little bit more people can get hyped if there is no any other effect on the market which would counterbalance this positive effect. And that's why I'm making this live stream, so you will understand whether there is another power or not. So that's what we're going to figure out at the end of this live stream. And there's a couple of more news we need to touching. As we just talked about, the US weekly jobless claims went down. I explained that to you. So for not too clever traders, this is a good news. For clever traders, this is not a news. So that's the difference now. Hope you're going to understand the difference between that. And now there is another one that Sony faces a 3.9 billion class action lawsuit over PlayStation Store prices. Now, this is not like a big news that it's going to destroy the stock market, obviously, but that shows another impact. So there are companies. The companies now started to struggle because the demand for their services or products starting to decline. Just remember my weekend video last week. That was Hungarian, by the way. But remember what did I tell you? What Walmart was warning to us, and it's not only Walmart. It's now the Nvidia with the report, obviously telling to us that they are bracing for impact, because they, if you read my analysis about the report, you know exactly that I included that there is no sales increase in the house of Nvidia, but they just increased the prices, so therefore their revenue went higher a little bit, but that's they do not sell any more product than they did in the previous quarter. So that's a warning signal that the demand is declining. So now companies are facing with declining demand, that this could take years to fixing this issue. And just so you know, and now we got other directions that those attack towards the companies are coming from, and that's the legal direction. So more and more news are coming that large companies have to pay fines for different things. For example, that's Sony. And so this is just signaling to us that negative impact on companies just piling up from all directions. And at one point, this will be a little bit too much for them, and maybe the whole system going to crack. And you know what that means exactly on the stock market. Now, but there is a different scenario as well with Tesla, because Tesla has launched its own car insurance, and not only that, they now announced that the Model 3 product, the new one, which is going to come out very soon, is going to be very different and very special. And so Tesla is now, shooting its bullets and trying to prevent investors fleeing away from Tesla, which means Elon Musk trying to make Tesla a safe haven asset, which is very weird because we're talking about the stock market. And I'm not saying he will be successful, and I'm not saying that its share price cannot crash. Indeed, I still think that if the stock market is crashing, Tesla will crashing with it. The question is how much. But I see that this is a very good language to communicate from Elon Musk, that he does not give a shit about any kind of stock market crash, any kind of economic downturn, because he is already focusing on the future of the company, and he wants to make sure whether you are an investor and want to get out of the stock because or a trader, a long-term trader, and want to get out of the stock because the share price is probably going down, or because of the company's income is going to come down, he is creating an environment to make sure whenever you're ready, you can come back as an investor or long-term trader and continue to, making your luck on the stock price. So that's a different scenario. That's something I don't see from NVIDIA, because NVIDIA is changing now for defensive strategy, and that's very obvious from the report. While Tesla is not defending itself, it's attacking straight, and that's a completely different strategy for going forward in the next 2 to 3 years, which will be very negative in terms of the economy. So that's a difference, a big difference. And I would laughing if he will be successful and somewhat, I'm not saying like as gold, but somewhat Tesla would be a kind of safe haven within the stock market, as for example, the energy related stocks. So now Citigroup employees prepare for layoffs, management reshuffle. That's just proof what I was communicating for massive months. There are still unemployment rate, a rising unemployment rate ahead of us. And now we start to get the news that everybody is started to lay down. Obviously, not many news will be saying about that, because they try to drive towards the narratives that everything is fine, don't worry, the economy is perfect, Joe Biden is perfect, just sometimes sleeping a little bit too much, but that's fine. Just don't worry, just go back and live your life, doesn't matter how shit is it. But in reality, there are massive layoffs, and we will see these layoffs in the unemployment rates in the upcoming months. That's for sure. I told you that last month as well. And again, one more. Sam Altman is back. Now that's a very funny story, because you all heard about OpenAI situation and that they actually fired Sam Altman, and he's back now. So Microsoft got a huge pressure, an unexpected pressure. So Microsoft did something which Microsoft didn't want to do. So I don't know how Bill Gates is thinking about that situation right now, but the plan, what Microsoft wanted in terms of business idea with OpenAI, is about to crash, because people and AI believers and OpenAI lovers do not want to see this bullshit what Microsoft did with the Microsoft products and services. So now this is going to create a very interesting situation in the upcoming months. Nothing has to do with any kind of stock prices, but if it has, it's slightly negative pressure on the Microsoft, because that's obviously probably going to reduce the revenue from OpenAI, and not by a lot, but just a little bit. And it's going to change the mind of people, how they're thinking about the company right now, into a little bit negative direction. I'm not sure whether this is a huge impact on Microsoft. I think that's not, but it's still something worth to mention. But it's very interesting to see how OpenAI will operate from that point. Funny things are happening. So this is an overall, let's say, a positive environment for short term in terms of narrative and market news, but it is a very negative effect for long term. So if you're thinking in trends on larger time frames, like daily or 4 hours time frames, it is negative. It supports bearish trend, while the news itself on the short run, it supports short-term movements. Now, if we take a look on the commodity market, there's not much news I bring in today, but the important ones which will definitely have an impact on the market is one, the energy market is experiencing somewhat negative pressures, and that's especially at the oil market, because the OPEC meeting was delayed. It will be held next week, and the market is reacting on a very negative way on oil because of that. Now, this is a signal that the market is really nervous about the OPEC meeting, because now everybody understands how the United States is pressurizing the market, especially the oil market, and it's dominating fully, and everybody's waiting for the OPEC to step up again and do something very, very drastic to go against the government of the United States. And because the meeting was delayed, they reacted in a negative way on the oil market. So that's just something signals to us that how nervous the market is. And you can imagine once the OPEC meeting take place, how volatile the market reaction will be at that point. So let me just raise your attention. When we're going to get the OPEC meeting, expect a very volatile oil market at that point. So this is very, very important and somewhat negative, by the way, at the moment at least. And also there's news that most of Ukraine winter crops in good condition, forecasters say. Now that's important because that means that the restrictions of delivering those products is easing, and this is a negative effect on especially the essential food industry. And so we might see not only because of that, but this is helping pressurize the market to the downside. So it's a very important information to us right now. If we go towards the Forex market, there is no big news at the moment. Only the weekly jobless claims down is somewhat obviously short-term positive for the US dollar, but the US dollar is struggling with other factors as well. This is why you don't see a huge spike to the upside from the US dollar. But because of that, and despite the declining jobless claims, the dollar is still down. That helps other indexes to stabilize themselves in a consolidation, or maybe just going to the upside a little bit more. So somewhat positive for the rest of the Forex market, but negative for the DX by itself. And the crypto market. Now, you heard about the 4.3 billion settlement with Binance, and CZ resigned as a CEO of Binance. And while as you reading the news, you can have very mixed feelings about that, because obviously, even though we all know that every single crypto broker did the business in the background, so don't make mistake. None of them are angels, and CZ was an angel as well. But at the same time, Binance was the one really were leading the industry, and despite they own little dirty businesses, which was not as dirty as, for example, FTX. Just to say, it still built something that it was leading the crypto market towards development. And therefore, just a little bit, I feel sorry about him, because what he achieved for the crypto is really remarkable and helped the industry a lot. But it seems like it's time for changing, and hopefully for the good reason. And hopefully the crypto market will experience a positive vibe out of this for the long term. And to be honest, I think so. Because the thing is that this is a signal from not only, now the United States did that, but this will have an impact on globally on the crypto market, because this is a signal that governments are thinking very seriously to regulate the crypto market. I hope you remember what kind of podcast we did in a Hungarian YouTube channel 2 years ago, when we were starting to raise your attention that this is happening, and within a couple of years the crypto market will be stabilized in terms of regulations. Now, this is an extremely good news for the crypto market, because the thing is that all market participants from the regular markets like Forex, stock market, commodity market, etc., they were in the past couple of years, they were really afraid to step into the crypto market because it's not regulated, it's not secured. And now we very obviously see that regulations start to take place and making the effect on the crypto brokers, which means they have to lay down and respect the regulations and operating on the way that the world is expecting, which gonna make traders enter the crypto market. And this is an extremely positive news. Now the question is how much money they will have to enter the crypto market. This is the thing what I mentioned previously to you. And again, there was a deep dive publication from Bela today, and I really urge you to go there and reading that, because I wanted to talk about very similar things today in this live stream, but then I don't have to do so because we already got the material for it. So don't forget to go there. You can find in the Hungarian Discord server as well, and you can at the advanced level, and you can find in the English version as well at the TOTM Pro server. So very positive environment in terms of news, and we all know that news are actually driving the crypto market. So that's excuse me, that's an important part of trading crypto. Now, if we go forward, let's see the sentiments. Now, the ETFs index and stock market sentiment is developing on a strange way. So the finance sector is experiencing somewhat positive sentiment from the market. But again, this is not investor sentiment. This is the not too clever trader sentiment, if I can say on that way. The health sector is also experiencing slightly positive. It's now in neutral territory, despite the finance is stepping to positive territory in terms of sentiment. So improvement on both, but the health is a little bit behind, while the tech sector is I'm not saying it's accelerating, because it's not. It's actually slowing down, but still keep the pace with the positive sentiment, with the not too clever traders and the traders who are clever enough to use it, this positive movement on the tech sector, but only until it's going to the upside. We're going to talk about the second part when we see the charts a little bit. So retail is experiencing, interestingly, negative sentiment pressure. Not too negative, so it's still in somewhat the negative to neutral territory, but it's declining, which is not a surprise because we got very bad data from producer side, and that means that retail traders are running out of steam, and maybe will running out of product as well, because there is no supply. So that means the retail revenue could indeed decline a lot. But remember what was the publication from Walmart last week, Amazon. I could just go on forever, because everybody is now raising our attention that the economy is slowing down. Consumers spending is slowing down. There is a big shit is coming towards us very, very quickly. So when you say there is a light, you see the light at the end of the tunnel. This is not a light. This is an ongoing train, actually. So just be very careful where you're running towards. Consumer services are declining as well. Not too much, not too big. It's still very similarly than the retail is staying somewhat in the neutral to negative territory. But the decline itself is major. This is a 180 degree turnaround. The car industry is also seeing negative pressure. Now it's a little bit lower than consumer services. So we need to expect somewhat negative pressure from the sentiment side, while the transportation is very strangely still improving. I think this is just a very short-term usage of this market sector, so be aware of that. But it is positive at the moment, and the energy sector is slipping back a little bit. It's still neutral, but we need to keep an eye on that energy sector. And OPEC meeting is ahead of us, probably going to be next week, so keep an eye on that. Even though if you don't trade commodity as oil, just keep an eye on the OPEC meeting, because it will indeed impact the energy sector on the stock market. Now, if we move towards to the commodity market, essential foods are experiencing somewhat little bit consolidation. It is an improvement, but it's not huge. The darker line represents where we've been on Monday at the previous live stream meeting, and where we are moving away from that point. And it is somewhat improving, but it's not a huge thing, and the whole sector is still in a negative environment in terms of market sentiment. But the non-essential foods are declining big, and it's somewhat neutral, but it's still the decline itself is pretty big. So there is a very sudden sentiment change on the non-essential sector. While the energy sector is consolidating very similarly than the essential food sector, but the precious metals are consolidating, but they're staying on a very, very positive sentiment level. It's just somewhat, pushing back the sentiment. The reason for this pushback is that when precious metals are rising, because obviously this environment requires it, because there is some panic and everybody try to save the money, keeping the value of the money. And I hope everybody realized already, but if not, I just want once again emphasize, Bitcoin will never be that kind of asset, safe haven asset. But at the same time, gold, silver, and things like that, they are definitely. And so when those investors putting the money into, for example, gold, there are traders as well. They are going with them and start buying it. But as I said, there is a difference between investor and trader. And so investors will hold the money there because they're not really interested at this point of the price level. But traders are doing it, and then they will at some point they will realize their profits. And if the prices continue climbing higher, they will get back and trading towards. But at some point they will, they will have a profit taking environment. And I think now we're experiencing this small profit taking time of that trading period. Industrial metals, however, somewhat declining, still in a positive environment. But as I emphasized in the last couple of weeks, I do not expect industrial metals starting a huge bull trend just yet, because we need the industry for that. We need the demand for these metals. And as I just told you a couple of minutes ago, we can expect we cannot expect this industrial improvement at least in the next 1 year. So yeah, let's see how it turns out. I hope I will be wrong, and after 6 months we will experience some bull trend. I really hope, because I love industrial metal sector to trading it, and therefore I would be also happy to make a mistake about that prediction. But the current scenario does not show any hopes for that. And the livestock is somewhat declining, but it's in a neutral territory, so there is no big change, but just slightly a little bit negative, moving in the sentiment. Now, if we move forward to the Forex market, as you can see, the DXY is experiencing further negative sentiment from the banks. Be aware, when we're talking about Forex market sentiment, we're talking about the bank sentiment, and that's declining further, or staying negative in the DXY, in terms of the DXY. The situation itself, it's somewhat improved compared to the Monday situation, but it's still very negative. So the DXY is unable to, or it's not expected to get out of the current structure just yet, unless there is something very sudden happening on the market, which is not impossible, but we just don't know about it yet. The EXY is declining compared to the previous sentiment data, and is staying in a neutral territory, while the JXY is also a little bit moving away from the neutral, getting into the negative territory very slightly. Let's see how it turns out. You all know that tomorrow we're going to get CPI numbers, and next week we're going to get CPI numbers, where the BOG core CPI going to be next week, which is extremely important in terms of the Japanese yen. The British pound is somewhat improving on the sentiment, which is very surprising for me, but it's not a big improvement. It's not a bit strange, but banks are showing more activity on a positive way on the British pound sector, while the ZXY, so the QB, is declining back to neutral from a fairly positive reaction on Monday and the last week. The Canadian dollar is consolidating at the moment with a little bit positive sentiment, but it's just a consolidation in the negative territory, while the SXY, so the Swiss franc, is still improving. I told you need to watch SXY. I really hope that you use those good advice, because for 3 or 4 weeks I'm continuously talking about the Swiss franc and how it's developing in a great way, And it does actually. Now, there are technical, obstructions ahead of us, but until that point, while the DXY was declining, the SXY was behaving in a very positive way, and I really hope you made your profit on that. And the AXY is somewhat improving, but again, it's moving to the positive territory, but I hope you are 100% aware of the AXY chart. By the way, if you're not, you can find the live chart on the Pro server. So just click on the link and you can see the TradingView live chart with our analyses, major trend lines, major resistances and supports and zones, and everything is there. So you can check it out and you can double check how the AXY or any other index is looking like at the moment. And so this is the sentiment. As you can see, that somewhat I'm not saying it's positive, but let's say neutral on the Forex market, the sentiment at the moment. And if we go through the crypto market, as you can see, the crypto market sentiment is declining compared to the Monday data, but it's still in a very positive environment. And this is a very good news for us. Good news, because when we reached the point we talked about that we might get some correction, you remember for that, we actually started the correction. And I told you there are two scenarios. Either we're going to go down in a correction big time and then we're going to get a deeper one, and it's still not very negative, but it will take a bit longer time, and we might lose the zone on the total market cap chart underneath 1.26. Or the other scenario is that we're consolidating above the zone, which would be the best case scenario, because that means with the start of the new cycle, we can get an extremely positive movement to the upside from the new cycle start. And the fact that the sentiment is declining, but it's not able to go into negative territory, it shows us that that crypto market participants do not want to see the crypto market really declining, but instead they want it consolidating. And then when the new cycle starts, so they get the trigger to start paying into the crypto market again, they can continue to the upside from a higher level above the 1.26. So this is an extremely good scenario. This is the best case scenario, what I told you 3 weeks ago about the crypto market. And I really love to see this, that the sentiment is so much positive. Now let's see quickly how is the technicals are looking like. So if we talked about the crypto market, let me start with the crypto market. This is the consolidation what I was talking about. As you can see, the market does not want to decline, but instead is waiting for the averages to develop to the upside, and then they will probably continue to go to the downside. The MACD setup is very positive, so I am very positive. This means, and look at that stock MTM. The stock MTM is already crossed the 40 line to the downside and is declining, while the price is really not declining, but it's consolidating. Best case scenario for the crypto market, and I really getting my fingers crossed not to breaking the 1.26 line to the downside, because if we do not until the next cycle opening, that would be very, very great. What that means, and where is the next cycle opening? It's here, as you can see. This is the thing, that we are halfway on the cycle, so we still need to wait a little bit, about 15 to 16 days to develop this consolidation. So maybe we're going to see some kind of uptick to the upside. I don't think that we will be able to break 1.47 within this cycle, but what we see right now is a beautiful, beautiful picture and a very positive prediction for the next cycle on the total market cap chart. And I love to see this, and I really hope this is actually going to happen. And if you take a look on the volume, you can see that the volume is not strong, is indeed unable to go above the green line with the average. Tried it last week, wasn't successful. We are unsuccessful this week, probably staying on that way, maybe rising a little bit, but we cannot break this green line just yet, as I predicted a couple of weeks ago. But we don't have to be afraid of this, because this volume is enough to keep this consolidation in one place. And once the total market cap can reach the next cycle opening at about 10th of December, we will see an uptick on the volume as well, at least at the beginning of the cycle. So the whole market is positive, but it's consolidating. So please be aware, if you do not have strategy for consolidation on the crypto market, you can be fucked very easily. But if you have something very good, consolidation strategy for some kind of stochastic based system or something like that, you could be pretty much successful on a chart which is consolidating. But not all the chart is consolidating, and we're going to have a look on the second part of this live stream very quickly. So the forex market balance is very interesting. As you can see, the DXY retested the scale EMAs. This is the 3 EMA group, which is the 8, the 13, and the 21 exponential moving average, representing the lower time frame power and made direction on a higher time frame. And as we see, the pressure is still going to the downside, so there is more space for the DXY to decline, and it will not be a hard job if we continue to get those negative macroeconomic data, which is affecting the DXY. The interesting story is, while the DXY is still struggling and mainly declining, the euro looks like getting a rejection from the retest, and that's exactly what I try to emphasize. Now, this is not 100%, but we will get this rejection because we are already above the scale EMAs, which is a huge support. But at the same time, obviously, as you know, on the EXY chart, that was a huge trend reversal flag pattern, which we broke here at this point to the downside, as the pattern predicted itself, and then we went back to retest. Even when we broke it, I was talking about that we need probably months to get it retested, but then if the retest successful, we can start going to the downside, which will probably positive for the DXY. And what thing is that, look at that, EXY is still declining hardly by the rejection itself, while the DXY in the last 2 days made a completely neutral moving on average. So that means that the EXY is a very weak currency on the market right now. If you take a look on the Japanese yen is also declining. This is a very bad news. I really hope, or my fingers are crossed, to get a rejection from the scale EMA group and just bouncing back to the upside. But it really depends on the language of the BOG, what they're going to use on this week and the next week. So watch those macroeconomic events and data, because those will determine the fate of the Japanese yen in the next couple of weeks, which you must know if you want to trade on it. The British pound is somewhat a little bit more positive than the EXY. As you can see, it gained some power during the week. It's still positive in terms of the week, but the last day was very negative moving. But it's above the scale EMA. So the power balance is somewhat positive, but it's not aggressively positive to the upside. And it is still making tradable if for example, the chart with the currency pair allowing to do that. I'm going forward to the QE, and as you can see, the QE is completely unable to break this. This is the reason why the sentiment slipped down, by the way. It's not negative because the sentiment is not negative as well, but it's unable to break 60.57. But we need to break it if we want to go to 61.82. So until we don't breaking that, we got a neutral to negative sentiment on the market, and therefore it's not very, not very positive, not very good to choose for trading. If we take a look on the Canadian dollar is really struggling. It wants to go to the upside somewhat. They're trying to get a support from the EMAs. Will be successful, but don't forget, the Canadian data, macro data, is also very flat. Not only the CPI, but next week we're gonna get Canadian GDP as well, and it doesn't show too much, to be honest. It's expected around 0.0%, which will have no impact on the Canadian dollar, which means the only thing which will dominate the Canadian dollar is the United States dollar.
So therefore, the Canadian dollar is a weak asset as well. Here is the Swiss franc. You know that it's going up beautifully on a way longer period than any other currencies. I'm very happy to see this. Very nice rejection from the scale EMAs. And despite the 3 negative trading day after each other, that I think it is still a very good, a very positive environment. And if we see signals that we want to continue, or the price wants to continue to go to the upside, it is still the major positive index on the Forex market. And finally, the Australian dollar, as you can see, the last 2 trading days were negative, but the overall week performance is pretty much positive. It's way better than the Canadian dollar. It's way better than the New Zealand dollar. But the two is really strongly tied to each other. So it's really weird that the Australian dollar can represent a more positive picture. But I'll be honest with you, I don't have high hopes with those from those movings to the upside. So just be careful with that if you're thinking on the upside with the Australian dollar. So that's the balance of the Forex market. And let's see the ETFs and the stock market. How is the balance of the stock market? Now, as you can see, the VIX is declining, not too hardly, but it's declining. Meanwhile, the S&P 500 is going to the upside, but it's completely losing its power because, yeah, that's just obviously, we don't see the volume here, but I'm going to show you later on and you will understand why it's losing its power to the upside. A news that put contracts are declining back. So at the moment, the put contracts are not strong on the market, which means we don't experience the activity of the smart money on the stock market, but neither on the options market. And that means that they are not active at all. So they don't do anything on the market. So they let the retail traders driving the market, and this will create pretty much similar scenario that we experienced previously, that the stock market can rising further, but on a very slow pace, while once they're going to join to the party, probably they're going to join to the negative side, as they did every single time they came back to the market. So expect that, or at least I do expect that. But don't forget, today there is no stock market because the US market is closed, because they're eating lots of turkeys today, and so they don't have the time to trading. But again, this represents a possibly positive retail reaction on the stock market, but probably brace yourself for any kind of impact. And if we're going forward, as you can see, we are above the scale EMAs, but the last 2 trading day was so much slowed down that we were able to create 2 doji candle, nothing else. So this is a very good signal for the slowdown. But here is the volume, and as you can see, the volume is declining. Now, when something is going up but the volume is declining, that means that the correction is coming, and the correction will be a little bit heavier than we thought. So it's a matter of time, the question of when, and it's not the question of if. So be very, very extremely careful. The RSI is starting to be overextended. I don't see any major warning signal from the MACD, unless we consider warning signal that the rising of the MACD lines are very powerless, so they don't have any kind of aggression. And also the stock MTM is already starting to get overextended, which means when this thing starts to go to the downside, probably this will be the start of the correction. Be aware of that and watch the stock MTM. This is very important. So this is the market overall. That's what the market is doing and why the market is doing. And if we take a look on the points very quickly, as I mentioned, now I went through the macroeconomic effects on the market, the geopolitics, the corporate earnings, the market news, the sentiment, and the technicals. All 6 we went through on that. I explained every single one of them, what kind of pressure it has or what kind of effect it has on the market. Let's break down on the market sector. So as I said, the macroeconomic effect, the pressure is accelerating on the ETF market. It's going down from -11 to -12. No, for the reason I mentioned. the geopolitical effect is unchanged at minus 6 points, so it's negative, but it's unchanged. It's not worsening, at least, but it's also not improving. The corporate earnings is unchanged, as I mentioned. I told you why. So it's staying on a minus 8 point, and the market news and events are being a little bit higher because obviously we got hit by the let's say very good Nvidia report, and then the not too clever trading community will just go and buy all in everything and all the dips, but they don't have the power. You just saw on the technical charts that they buying the stock market, but they do not have power. So that this is a very, very dangerous scenario. So whatever the market is doing it powerless. So any kind of upside movement is not supported by the news because it's still negative. Despite it's improving, it's still negative. It's not supported by the macroeconomic area, not supported by the geopolitical effect, not supported by the corporate earnings, not supported by the sentiment because it's still negative, it's unchanged, it's just negative with the minus 2, but it's still negative, and not supported by the technicals, which technicals decline today from minus 9 to 10. And you know what they're declining? Is that because if you take a look on the charts, on the ETF charts, almost every single one, and we're going to have a look today, almost every single one on inside a rejection zone or just about to attacking a zone to the upside, rejections. So the possibility, the chances for rejections are increasing, and therefore the point, because the technical is somewhat predicting the market, is declining to the downside. So the overall point is still able to increase from minus 44 on Monday to minus 43, which is an improvement. But we talked about there is no power in the market. The retail, the not too clever retail community is driving the market right now. And therefore this increase, this is the reason why it's slowed down. There is a big drop and it's slowing down. It's powerless, and we need to be ready. We need to prepare for any kind of bad it's coming. So the overall picture of this market sector, the ETF market sector, is that the direction as of the moment is unstable, because from the technical perspective, you cannot say to every single ETF or index chart that it is in bear trend. Most of them fundamentally in bear trend, technically in bull trend. So that's why it's unstable, because the fundamentals are not supporting the technical trends right now we are seeing on the charts, thanks to the not too clever trader community. And the direction status is slowing in rising. So most of the ETFs, the major ETFs are somewhat rising, but they're slowing down in movements. And that's the status of it. Now, the sensitivity, the strength, if the market is going into trend, is coming from the macroeconomic area and the earnings, because those are the ones really pressurizing the market sectors. But the fact that we don't moving into that direction, but you see that the macroeconomy start placing the pressure day by day further, while the market news is consolidating, while the sentiment is pretty high, that means the technicals is also starting to place pressures on the charts. Earnings is on almost full pressure. That means at the moment you see the news start to go down and the sentiment start to go down, and maybe the geopolitics also getting some pressures, this is the end of the story. That's when the shit starts to come down big time. But as I said, there's a Christmas period. I expect us a way weaker Christmas revenue period this year than it was last year, which was weaker than the previous year, by the way. But it's still going to show some improvement compared to the current state of the economy, just because of the Christmas shopping. But don't fool yourself. It's not going to last until January. So I think the market will indeed keep up the pace, consolidating until January. But the start of the next year, it's going to be a terrible experience on the stock market and the ETF market. That's the conclusion I can make from all this. So the surprise, as I said, coming from the geopolitics, the news, the sentiment, and the technicals, as soon as they start declining big time in a trend, in the trend-like manner, this is the end. This is the beginning of the end. So yeah, just keep your eyes open on that. So all sectors, because of that, is very risky right now, because we're moving to the upside without the power, and you can indeed making money in these market sectors to the upside. So buying assets, you can do that. You can create money, but only you will be able to do that if you know exactly that at one point, for every single danger signal, you must get out of the position, because otherwise you're going to stuck in and you're going to fuck up exactly on the way you did 3 years ago. So TOT and Pro members are usually here for a long time with us because they are very loyal, and obviously we are creating a very good community. I believe whoever is here for a long time is already understand this, that you need to get out the position, because the only way to making money on the market is closing the position. Making money is not buying something. Just because you bought something, you do not have the money. You did only one thing, spending your money when you buy something. In order to create profit from it, you must close it. And that's something, a rule on the market, whether you're trading on the long term or the short term, you must understand this. Both the short and the long term need to do the same. At some point, you must close your positions, and you better doing on the danger signal, because if you don't do that, you're going to stuck in. That's the conclusion for now. Moving towards the commodity market, the macroeconomic field, as I explained to you, doesn't have too much effect on the market, but it's still very positive. So it's staying on 16 points in positive. The geopolitical effect is unchanged with 17 points. The market events and news are declining to the downside because of the bad news I just showed you about commodities. So it's declining back from 3 to 2 points. It's still positive, but it's declining big time, by the way. The market sentiment and psychology, as I explained to you when we analyzed that the market sentiment and psychology, let me just show you once again so you can put all the live stream into picture. Why it's happening. So I explained what is happening here right now. Most of the market sector is declining, even though just a little bit, but it's declining. And therefore, the points for market sentiment is declining from 5 to 4. So we're losing 1 point on the market sentiment as a market driver, which is could be responsible 17% of the market movements, and it's using only 4% from it. So it's very weak power at the moment. And the technicals are declining as well from 3 points to 2 points, and that's not a positive news. So we either consolidating or declining with the points, which result a declining overall points from 44 to 41, which trying to predict a somewhat declining commodity market. But again, this is a different situation on different market sectors within the commodity market. And if, for example, precious metals experiencing some negative pressure on the stock market, and therefore some money is going fleeing towards the gold and the silver market, then this point is not representing the precious metals, but the overall commodity market is probably going to decline a little bit in the upcoming days. And so this is the prediction. So the direction, whether it's bearish or bullish, is very mixed on the commodity markets, because it depends on the market sectors, as you know. But all of the trend what we're experiencing now is consolidating at the moment. So the sensitivity when we are moving into a trend, which was mainly bullish in the commodity market, but in some certain cases bearish, is the power which is directing this bearish or bullish trend is coming from the macroeconomic area and the geopolitics. They are very strong, mainly supporting bullish trends. But the surprise possibility is coming from the technical picture, the sentiment, and the geopolitics. So while the geopolitics is supporting the bullish trend, don't forget that we have a very overheating geopolitical situation globally, and therefore so much surprise can come from one day to another. And be aware of that, and watch those news and everything what we are posting on the website. By the way, don't forget to follow us on the website, because we have so much news. If you miss it, you miss the market completely. So the risky sectors is actually all of them. because all of them requires high attention, because what doesn't matter what kind of trend a certain commodity is in right now, it is consolidating, and we need to be very careful with that. And the main risk on the commodity market is that the market itself is unstabilized because of the consolidation, and the market is waiting for other markets' reaction. And that's what I just explained to you with the precious metals. For example, if the stock market starts to fall, it doesn't have to fall like a big crash, it's just falling for maybe 3 or 4 days in a row. That could, strengthen a little bit the precious metals market, for example. And that's what I talked about. So the commodity market is waiting for other market sectors' reaction at the moment. So that's the conclusion of the commodity markets. Let's go for the Forex market. You know the explanations, that the macroeconomic field is easing from the pressure a little bit, from minus 16 point to minus 14 point, but it's still very negative. Just so you know, don't forget that. The geopolitical pressure on the market doesn't change. It stays on 1 point. It's positive, but it's like, neutral, rather neutral than positive. The market news and events does not change. Its effect is minus 6 point for 3 consecutive meetings by now. So there is no change in the narratives. But the market sentiment and psychology is somewhat improving at the moment. And that's probably because of we are in an upswing part of the direction within the consolidation. So it's going up from minus 4 to minus 3, and the technicals are consolidating at minus 6 points. So that signals that the market sentiment and psychology is improving with 1 point. That means that banks are somewhat improving. Maybe the retail trade is somewhat improving, and the usage of the currency is improving some of the prices. That's because the DXY is able to decline, but the technicals are not improving. That means the technical chart does not support any rising at all, which means if the power which is driving the market trend, which is the macro and the news, and it is negative, if it gets back the power, because now it's coming up, that means that this is the time of correctional consolidation to the upside. But if you see that this point is starting to get lower and lower again, that means that the market is ready to move into the direction, which means the DXY is ready to move to the upside, and the rest of the market is ready to move to the downside. So this is the signal what we need to use. So now you understand that the sentiment is positive because it's not driven by the trend sentiment, but the technicals are signaling that it doesn't want to improve, and in this case the technical is waiting for the signal of the macroeconomic. So we need some macroeconomic information, data, which is very devastating to the rest of the market, but positive for the DXY. That's what we are waiting for. And if we get that, this point start to decline, and that's the end of the correction to the upside and other currencies. Now, the reason why I'm telling you this one, because if you decide to go buy with some of the currency against the DXY, you know exactly what kind of macroeconomic information you're supposed to get a signal, a danger signal, and get out of the position. If you don't get this, you don't need to get out. If other technical requirements does not, force you to get out. But by fundamentals, you don't need to get out until this not happens. But exactly, I have the macro analysis, so you know every single week which kind of data is coming, at what time exactly, and what do we expect and what it means. So you watch this live stream, you understand what you need to check, then you go to the website as a pro member and read the macroeconomic analysis, and you will get every single information you need if you trade, when and why you need to get out of a position, or whether you need to open this position, or you better just waiting a little bit more. That's how we build up the pro level, and that's what you need, how you need to use it. And this means that All market is explained to you 100%. So if you miss this using it, you're never going to be okay with trading. So get this good advice. Get this good advice. So the surprise, which could change the things, which is currently consolidating or correcting to the upside, could come from the geopolitical field, the sentiment, and the technicals, because the macroeconomics is already changing it. But if something drastical happening in the geopolitical field, the sentiment will change immediately, therefore the technical will change immediately, and therefore we can feel the macroeconomic pressure as well. So be aware of that. And the main risk on the Forex market right now is that the DXY will make more corrections to the downside, and this causing further consolidation or rising to the upside in other indexes, which is dangerous because now we know exactly that this is an unnatural movement from the market, because the market is technically bearish and not bullish, and therefore any kind of movement from an index, from a currency index to the upside is the dangerous moving, and when they start to move to the downside, this will be the stable moving. So we are better waiting a little bit or just get some of the riskier options, but knowing exactly when to get out of the market. I cannot emphasize enough this. You're okay to buy something, but just be aware, and I explained why and when you need to get out. And later on the Discord server, we're checking the technical charts as well, so we can get this fundamental information together with the technicals, because the two doesn't live without each other. So that's what we're going to use. That's what we're going to do on the Discord server. By the way, if you have any requests to make in a technical analysis, just let us know, and we're going to make it on a pro server. So that's the Forex market. The stock market is pretty much similar to the ETF market. The macroeconomic pressure is accelerating a little bit from -12 to -13 points. The geopolitical effect is staying on -6, negative, but it's consolidating. There is no change on that. No change in the corporate earnings, as I explained to you why. There is a little improvement in the market news. That's because of Nvidia, fun. And then that's why we're slipping up from -6 to -5. But it's still negative overall. So all the news having a negative impact on the stock market. Now somebody will asking me, okay, Thomas, why are you saying it's negative? Because the market is moving in a positive direction, so you're lying. I'm not lying. You need to understand that there are 6 main drivers, and if some of them are more positive and counterbalancing one of the drivers, for example, the macroeconomic area could have a negative impact on the stock market. But if somebody is tweeting something like, I don't know, Bill Gates engaged Joe Biden, and they are living in love and peace forever from that moment, this could, counterbalancing the current, the actual movement, the actual negative effect of the macroeconomic area. So this can be negative, but this is improving compared to the previous one. So that's why it could send some positive signals, but it's still overall negative news all over the place about the market. The market sentiment and psychology is unchanged at -10. I explained that to you with the analysis, the sentiment analysis I showed you previously. And the technicals are improving. Now, that's a different scenario what we saw. So the sentiment is unchanged, which means in the stock market, retail traders don't know what to do. So they cannot decide about whether they should start selling it or they should start buying it, because they don't understand the market. But something they realized, that there is no major direction. There is no major power to helping them, identify which direction they should follow. So they completely lost on the stock market. They don't know what to do right now. Meanwhile, technicals on some charts is still allow the prices to go higher, because we didn't reach the next resistance, the next zone, and things like that. So there are opportunities to the upside. But the question is whether this opportunity will be used from the retail traders or not. And that's a big question. So this is a very unstable market. That's what we know exactly. Do you want to trade on an unstable market? Because what we learn is you need a stable market in order to identify a direction which can move into one direction, in a certain time period, so you can use that direction. And you don't need to, being afraid about, oh my God, it's turning away again. So if the market is unstable, even in small time frames as well, this is a bad market for trading right now. I'm telling you, that's a bad market for trading right now. So the overall point is increasing from minus 51 to minus 52 to minus 51. Now that's a very slight increase. This somewhat supports the opportunity the technical charts showing us. But it doesn't really, say that, oh my God, we're gonna exploding to the upside. And so, yeah, that's a prediction that we have the opportunity to move to the upside a little bit more on a very, very unstable way. So the market direction is very mixed because obviously some of the stock is in bearish market, still in moving to the downside, in sell-offs, and some of the stocks from other market sectors are bullish technical wise, but is not supported by fundamentals, and therefore any kind of movement to the upside is slowing down to the upside right now. That's what we're experiencing. Losing the volume, losing the momentum. Every single chart is showing that. Just a couple of them as exceptions. Now the sensitivity of the market when we are moving to trend direction, which is supposed to be supported by fundamentals, is to the downside, is bearish, and the macroeconomic area and the earnings, the one which is really, really strongly supporting that. And they are actually supporting just strong enough, but everything else was improved because of this, hype and correction and things like that. And so the surprise possibility could come from geopolitics, which means any kind of change from the geopolitical, language, what we are reading day by day, can be a huge impact on the market sector because the market is ready to react on it, but it's just, we haven't got the news. So that's why when we got a change in the geopolitics, which was improved in the last couple of meetings, in the last few meetings, but it stopped, it's consolidating now, and it's still negative. So once we get a negative pressure on that, for example, Russia is sending again very bad messages to the United States, just so you know, because Finland wants to close the borders. So if that escalating, and could escalate quickly, as we already experienced in a couple of situations, therefore we can immediately get the negative news, which means the geopolitical point can start slipping down. The news can start slipping down as well for the negative news. This will drive the sentiment to the downside, and the technical starts to decline as well, which means the macroeconomic can start full pressurizing the market, the stock market. That's what we are waiting for. Until then, we are making fundamentally corrective movements to the upside, which is slowing down day by day. So that's how we understand the market right now. And it's not like we think something about the market. These are the facts, all the most important facts, pushing together and understanding together. That's what the market is doing. That's why the market is doing right now on the stock market. So somebody's asking me, "Oh, you stupid! Why don't you buy for long term on the stock market?" Because I'm not stupid enough to buy anything for long term on the stock market. I am trading, and if I have an opportunity, I'm gonna open a position and then closing for the first time of the first sign of the danger, whether it's technical or fundamental. And then if I experience that the market is moving towards to the upside, I'm gonna push back in and just buying again and getting out for the first sign, because I do not want to stock in any position. I'm not stupid enough anymore to stock in a position and just not to close a position because, I'm hoping it's not going to go down. Yeah, anytime we hope it's not going to go down, that's the time where we're losing the money on the market. That's why 74 to 84% of people losing their money on the market, because they are stupid enough to losing the money. So don't be stupid, trade on the market. That's always what I'm going to say from now on. And the crypto market, which is the surprise of the day, and I am very happy with that. So the macroeconomic pressure is negative, as I explained, on the crypto market because the money supply is really suppressed by the macroeconomic area. And so that means if there is less and less money in the in the economy, that means that there is average less and less money to put into the crypto market, which is a negative effect on the crypto market because this will set a cap for the possible highs on the bull trend what we're experiencing right now. The geopolitics are going back because despite all the geopolitical tensions we're experiencing right now, from the crypto perspective, the global geopolitics is stepping up in order to regulate crypto market because they want to use it. They want to use it, and that's good. And that's what they're going to do. And this is creating a very safe crypto environment for the long term, and that's a very positive effect on the market. The corporate earnings has no effect on the crypto market just yet. But as we start receiving financial, informations from those projects, and this, I mean, not like I write something on a piece of paper. We need reports, we need publications. Until we don't see that, the corporate earnings cannot and will not be affected. Will not affect the crypto market. So macro events and news, yes, as I told you, those news what we are anticipating right now is improving. So we are moving forward from 14 points. There was 4 consecutive meetings with 14 points. Now we're moving up to 15 points, which is very positive. And that's what's driving the market. But the sentiment is declining, and that's because either they're running out money for the macroeconomic reason I just mentioned, or they're really afraid because they are not sure just yet that this is really a bull market, and they start realizing profits. They start taking the profits, which is a big change in the crypto market because previously the market was stupid enough not realizing the profit. But now, suddenly, that's what we see, that somehow the crypto community is finally started to educate itself. Or at least the majority of them learned by previous mistakes to hodl, and they start to, taking the profit. And if they're experiencing that they're taking the profit, but the price doesn't really go down, excuse me, or just consolidating as it's doing it right now, they're going to get back into the game. And that's the healthy market. That's called healthy market. Previously, the previous crypto bull trends, there wasn't healthier. There was exponential all over the place, bombing to the upside, then crashing all the way down. That's not a healthy market, but that's a sign of a market stabilization. And I am very pleased and very happy to see those signs. Just because we're doing these stupid numbers, we're reading the market and know exactly what the market is doing. So I'm quite happy that the sentiment is going down, despite the news is going up. Because that means there is some consciousness in the market. They started to think, and I'm very happy to see that. And maybe that's the trade on the market, Hungarian side of the market, by the way. Just so you know, because we got that feedback from one of the largest crypto broker on the world. So yeah, there you go. You might drive in the crypto market right now. So the technicals are declining a little bit from 7 to 6 points. That means if you're watching out the technical charts, most of the charts is creating some kind of reversal pattern, some kind of, rejection, experiencing it. So we might get some more moving to the downside. But the overall point is showing an exactly same point as 27 was previously in positive, by the way, and it's 27 today. By the way, just so you know, when we got into positive, that happened before we claimed that this is, or we stated that this is a bull trend on the crypto market. And after that, the technical picture was proving that we just stepped into the bull market. This is how good this point is. So what it shows, despite all what I just mentioned about the crypto market today, we have a 27 point again. which is unchanged, which supporting the idea that the crypto market indeed has a huge chance to keep this consolidation and not to make a huge drop to the downside, but rather staying above 1.26. We can decline all the way down here. We should not care about. This is part of the consolidation as long as we don't break in 1.26 to the downside. And I think this behavior at this point, what we just saw now, is almost 100% supports this, that we can stay within this consolidation. This means at the next cycle on the total market cap, we could have a very, very positive outlook on the crypto market. Are you happy with that? Because I am very happy with that, which means that we can go back to trade with the crypto a little bit later. Yep, good news. So, this is the interpretation of the market right now, what it does, why it's doing it. And for the second part of this live stream, for all the TOTM Pro members staying with us, we're going to check out a couple of charts quickly so you can have an idea what I just told, what it means in terms of the chart itself.